In progress.
Hello there. Welcome back to my channel. In this video, I want to look at the Economics N4 question paper of June 2025. So we are going to look at the first question that we have in that question paper, that is on section A. And remember, our section A is compulsory, meaning we have to answer all the questions that we have in section A. So in terms of our question one, we have the multiple choice section as the first section that we have. So first question, a basic economic problem by faced by all economists. Of course, we have got responses that we need to choose the correct one. But of course, we have got a key term that we have, that is the basic economic problem. So basically, the basic economic problem, it describes the imbalance between unlimited human wants and needs and the limited resources available to satisfy them. So basically, we are saying under basic economic problem, we are having a situation whereby we have limited resources to meet unlimited wants and needs. So in that scenario, we have a problem. So the basic economic problem consists of three elements, whereby we have got a scarcity as one of the elements, we have got choice as one of the elements, we also have opportunity cost as one of the elements of the basic economic problem. So the one that is faced by all economies is the one of having few resources to meet unlimited ones, which is specifically a scarcity, which we are having on C. So we are saying the correct response that we have is scarcity. Remember, scarcity also we describe it or it occurs when there are limited resources to meet obviously unlimited needs, forcing societies to make choices about how to allocate these resources efficiently. So basically, that's what we have adapt scarcity. So we know that this basic economic problem can also be depicted or shown on a production possibility curve, where we have three elements are being highlighted on the production possibility curve. So on the second part is number two, scarcity refers to. So we have defined scarcity as when we have got limited resources to meet unlimited needs. So basically in that scenario, you see that the correct answer that we have there is a D, whereby we have got limited means to satisfy unlimited needs. So we have C. Then number three, price theory is part of Dutch economics. And of course, we have a term, price and theory. And of course, when we're looking at price theory, it is a branch of economics that studies how prices are determined in an economy. So as a part of it, that is a part of microeconomics. Remember, microeconomics looks at an individual, a firm point of view or individual industry point of view. That's microeconomics, which exactly is explained by price theory. So basically, microeconomics, we are saying it is uh, the study of the decision making behaviors of individuals. It might be the study of decision making behavior of households or firms on how they allocate limited resources to produce or distribute and consume goods and services. So we are saying it analyzes the individual components to understand how they interact in markets. So basically, that's the microeconomics point of view. So you'll see that price theory now becomes a part of the microeconomics. Remember, price theory cascades to the explanation of the interaction of the forces of demand and supply and explaining how prices are determined. So basically, that's what we have in terms of the price of theory, which it can be done from an individual, a household, or firm point of view. So basically, this is what we have in terms of number three, making microeconomics the correct response that we have. So we have B. Then number four, it reads sector that extracts raw materials from nature. Of course, this is the primary sector. So we have A. Then number five, world markets are known as we have got global. Global markets is the correct answer, which is one B. An example of public sector involvement, of course, we have got a term that we have, which is public sector. So we need to understand the public sector. Remember, the public sector is part of the economy that is controlled by the state. So that is the public sector. So which one is the correct there? All the responses given, we're given subsidies, private goods, exports, imports. So you see that public sector, as we are saying, it's part of the economy that is controlled by the state. We see that the one that is within that context is the subsidy. Remember, a subsidy is a sum of money granted by the state or the public or any public body to help any industry or business keep at the price of goods or service low. So the main objective of the subsidy is to reduce the price to protect the consumer. So the subsidy is an instrument that is used under fiscal policy, specifically under government expenditure. That's when we've got subsidies. Of course, we've got those firms or businesses that are facing high cost of production. Those are the businesses that are assisted through payments called subsidies, so that the cost of production that they are facing is reduced with the main aim of finally reducing the price. So basically, that's what we have. So we have A as the correct response. And moving on to number 7, difference between income and spending. Remember, um, all the income that is earned, all the income that is earned is either spent or saved. So when we say difference between income and spending, we are saying the answer that we get is savings. Because if you say savings plus spending, you get your income. So we have a savings A. That 8 ESCOM is a typical example of a dash. We've got oligopoly, duopoly, perfect market, monopoly. So you'd see that the correct answer is monopoly. Remember, a monopoly, we have got only one entity that is operating. One that is operating with that when we've got a monopoly, which is typical of ESCOM. So remember, ESCOM is a government-owned public company. ESCOM is a government-owned public company that operates in the public utility industry, specifically the energy sector. It is the only public company that is there, only the company that is operating in the public utility industry, so or the energy sector. So basically, it becomes a monopoly. So that's what we have on number 8. So we move on to number 9. A condition where market forces do not allocate resources efficiently. Of course, this constitutes a market failure. We have a market failure on C. So basically, looking at a market failure, it's a situation where a free market operating on the principle of supply and demand fails to allocate resources efficiently, resulting in suboptimal distribution of goods and services. So that's the scenario that we have under market failure. So we got number 10. A product market is a market for goods and services, which is clear. We have our B as the correct response. So that's all what we have on our multiple choice section with a total of 10 marks. Of course, each question with 2 marks. So we go to the true or false section. We have the first part saying natural monopoly has high developmental costs, which is true. Then on number 2, economic loss attracts new sellers to the market, which is false. Remember, economic loss is a financial harm or a loss of money. So basically, it is a quantifiable loss that can be seen in the financial statement. So you can see economic loss in the financial statement as lost profits. So if we have got lost profits, it means it's not going to be it's not going in any way leading to the expansion of businesses. So we are going to see that the business will contract their production capacities due to that, and we are not going to have new sellers coming in. So that's why we're going to have a contraction of sellers. So basically, that becomes false according to our number 2. Then we go to utility can be measured. You see that utility cannot be measured. That makes it false. Remember, utility is the satisfaction that is gained from consuming a product. So no way that we can measure that. Or we can define utility as a state of being useful. It is subject. You see that it is a subjective concept. It's a subjective concept of satisfaction rather than a physical quantity. So that makes it difficult to be measured. It can only be measured indirectly. So we can take note of that. Then we go to number 4. Total cost refers to fixed cost plus variable cost, which is correct. Total cost is equal to fixed cost plus a variable cost. So this is true. Then we go to number 5. Economic growth is measured by increase in real GDP, which is correct. Economic growth is basically the increase in economic activity in the economy, which can also be measured by increase in GDP. So Remember, GDP is the total monetary value of goods that are being produced in the economy. So if a total monetary value is increasing from one period to the other, we say there is economic growth. So that makes our statement to be true. So we have true. So that's what we have on the true or false section. Of course, we move on to the next part, whereby on the next part we have got the matching with section. So you have to choose a description on column B that matches a term in column A. Of course, the first term that we have is profit. And we know that the profit is a scenario whereby the revenue is greater than the expenses. And then in that scenario, we are going to have a profit. So which explanation is matching profit according to what we have? So if you go down, you'd see that F is the most appropriate remuneration of entrepreneur. Remember, profit is a factor income which comes from entrepreneurship. So the factor income of entrepreneurship is a profit. So basically, F becomes the correct response that we have. So we have F. Then if you go to utility, we have defined utility as the satisfaction gained from consuming a product. So in that context, we check out the most appropriate explanation that we have. We've got K, satisfaction received from consuming goods or services. So K is the correct match that we have of utility. Then we have K. Then moving on to the next one, number 3, inefficient. Inefficient, we check which one do we have which matches inefficient. It's saying any point inside PPC is the correct response. Any point inside PPC, which is J. So remember, in terms of our PPC, we have a scenario whereby we've got vertical axis and horizontal. So in that scenario, you'd see that we are going to have a curve which bows outwards, which is our PPC. So we are saying this is our PPC, which is production possibility curve. And any points that we see inside the PPC represents inefficiency. And any point on the PPC, like this point here, on the curve is represents efficiency. So what we are saying is, with the resources that are available, if we fully utilize them without wastages, we produce along the PPC. But if you waste the resources, we produce inside the PPC. And then any point that is outside the PPC, that is, for example, at this point, we've got point C at this point, is a point that we cannot achieve because we do not have resources to produce at that point, and it represents scarcity. So basically, that's the scenario that we have. So are we now move on to a product market. We have defined product market as represented by goods and services. So, of course, according to our responses, you'd see that the correct one is A, goods and services are traded on it. So A is correct one. Then Pareto efficiency. Pareto efficiency, we check again which one do matches Pareto efficiency. So if you go to I, occurs when it is impossible to make one party better off without making someone worse off. So that's Pareto efficiency. So I, then economic rent, which is the most appropriate remuneration of land, is the most appropriate. So we have B. Circular flow, we check which one is two measures circular flow model that shows how participants in the economy interact. Of course, we've got participants that are there. So we have a D. Remember, what flows in the circular flow is the real flow or the money flow. Then we have got GNI. We check which one to match is the GNI, which C is the most appropriate, whereby we're saying account for gross wage and salary payments earned by the household sector for supplying labor services. Remember, this is the gross national income. So we have C. So this is part of the income, which we have on C. Then allocative efficiency. We go to G, occurs when there's optimal distribution of goods and services, taking into account consumer preferences. So we have G as the most appropriate. Then we've got the budget line. The budget line, the appropriate explanation is that this is the line of affordability for consumers wanting to buy multiple goods of course, we have H as the correct response. So that's what we have on the matching part. Of course, we've got the last part, which is 1.4, which is saying complete the following sentence by writing only the missing word or words. So we've got total cost minus dash equal to a fixed cost. Remember, we have given a formula whereby we are saying fixed costs plus variable costs equals to total. Of course, we try to make our equation visible. So we are saying total cost equals to fixed cost plus a variable cost. So of course, this one is saying total cost minus. Of course, if you equals to variable minus is equal to variable cost. So we are making variable cost sharp with the formula. So it becomes variable cost equals to total cost minus a fixed cost. As simple as that. So so the correct response that we have on 1.4.1 is fixed cost. Then we move on to the next question, which is now 1.4.2. During the dash period, all factors of production can be changed. This is the long run. In the long run, all factors of production can be changed. Remember, in the short run, we have got at least one factor being fixed, which is mostly length will be fixed in the short run. But when you go to the move to the long run, it will becomes variable. Then we go to 1.4.3. A system where factors of production are managed and controlled by individuals. Of course, this is capitalism. Then, if a business is unable to pay average variable cost, it must shut down, must close. Market price is the same as the equilibrium price. Remember, the intersection point that we have on the forces of demand and supply. In the demand curve and the supply curve intersects, we have got the equilibrium price, which again is the market price. So we have equilibrium price. So basically, this is what we have, guys, according to our section A of the question paper of June 2025. So thank you for listening, and hopefully the video was helpful. And please, let's don't forget to subscribe and share for our channel, and share the link to our colleagues who are doing economics at 4. As for this video, I'm signing out. We'll meet again.